Hello fellow compounders. Today I'm going to tell you a secret that I wish I'd known when I was in college. All you need to know about investing in stocks is contained in this video. I'll show you how to become a millionaire by using a no-brainer coffee can to stash away money and invest it hassle-free. And by the time you decide to stop working, you'll be a millionaire and you'll be able to live off the funds in your coffee can. But before we begin, I must tell you that this video is for educational purposes only and should not be considered financial advice. I am not your financial advisor and you are responsible for your own financial decisions. Okay, let's get started. First, there are two important rules. Number one, don't lose real money. And number two, always be compounding. Number one, don't lose real money means not letting inflation steal your purchasing power. For example, did you know that in 1922, a pound of Oreo cookies cost 32 cents? Today, 100 years later, in 2022, a pound of Oreos costs $4.23. This means that you need 13 times more money to buy the same number of Oreo cookies than you did in 1922. That's inflation, the erosion of your purchasing power. The inflation on the price of Oreos has averaged 2.6% annually over the past 100 years. This means that your money had to earn 2.6% per year just to be able to buy the same number of Oreos. To put it in plain language, your money needs to earn at least the rate of inflation in order to not lose real money. Anything less and you'll be losing purchasing power. Number two, always be compounding. Since you don't want to lose real money, you'll need to always be compounding, plain and simple. Any money that you keep stashed away and not compounding at a rate higher than inflation is losing purchasing power. So that's our motto of our club, always be compounding. This is where your no-brainer coffee can portfolio comes in. The coffee can concept comes from the Old West. Back in the late 1800s, people used to store their savings and valuables in a coffee can. In the investing world, we created the concept of coffee can investing to trick ourselves to buy stocks in good businesses, put them away, and hold them for a long time to allow them to compound. I made a video detailing what coffee can investing is, and here's that link. The no-brainer coffee can is one where we don't buy individual stocks. We buy low-cost index funds instead. In my case, I use VOO, which is Vanguard's version of the S&P 500 Index ETF. Vanguard was the first to introduce the S&P 500 Index Fund. VOO contains a basket of the 500 largest publicly traded US companies weighted by size. Its top holdings are Apple, Microsoft, Amazon, Tesla, Alphabet, Berkshire Hathaway, United Healthcare, Johnson & Johnson, ExxonMobil, and Meta, previously known as Facebook. The S&P 500 has outperformed 90% of all large cap funds over the past 10 years and outperformed 95% over the past 20 years. Over the past 10 years, VOO had an average annual return of 11.7% and an expense ratio of 0.03% or 3 basis points, which is a very reasonable fee. That means that for every $10,000 invested in VOO, you are paying $3 per year. All you need to do is to put away a fixed amount or a fixed percentage of your income and stash it in your coffee can. Just buy VOO regularly, set it and forget it. Do this during your entire productive life, and when you decide to retire, you'll be pleasantly surprised. It's that simple. Now that you don't have to think about investing anymore, you can focus on improving yourself and increasing your income. Whether you're working for someone else or own your own business, focus on increasing your earnings to a level that you're comfortable with. If you want to be financially independent faster, just earn more money and add a larger percentage of your income to the coffee can. To not have to work for money anymore, which some people call retirement, all you need is for your annual expenses to be less than 3.5% of the value of your coffee can portfolio. When you reach this level, you are financially independent. You will be able to take out 3.5% per year from your portfolio to live on, and you will never run out of money. I made a video on how to calculate your retirement number, and here's that link. I use 3.5% because I'm conservative. Some people use 4%, and the more aggressive people use 5 to 6%. Here's an example. If you start working at age 22 and work until age 62, you'll have 40 productive years to put away funds into your coffee can. Let's say that you just graduated from college and earned $60,000 per year, and you decide to stash away 20% of your annual income in your coffee can and invest it in the S&P 500 using Vanguard's S&P 500 ETF, ticker symbol VOO. Also, let's assume that you will be able to increase your income by 3% a year. This is the estimated inflation rate. And let's assume that VOO returns 9% per year instead of the 11.7% 10-year average, just to be conservative. So by year 30, if you do this formula, you'll have over $2.1 million, and by year 40 at retirement, you'll have over $5.6 million. At that point, you'll be able to retire and withdraw $197,000 per year from your coffee can. That amount replaces your $190,000 in income that you will be earning from your work at that time. This is only one scenario. You could retire earlier if, number one, you grow your income faster, or number two, if you invest more of your income, or three, if your investment returns are better. There are many variables, but overall, this is a formula that works. You have more control over 1 and 2, which is how much money you earn and how much of it you stash away. The advantages of this no-brainer coffee cans are, number one, the program is pretty much automatic. It requires little or no effort. Number two, you won't have to worry about researching stocks. It takes time, study, and the right temperance to invest in individual stocks, which you won't have to do. Number three, you won't have to worry about the market gyrations because you're holding for a long time. Number four, you will outperform 90% of all active investors and outperform all other asset classes over the long term. Number five, the coffee can is tax efficient even if you don't hold it in a tax advantaged account like an IRA or 401k. The reason is that you don't pay capital gain taxes until you sell. So for 30 or 40 years, your investment compounds tax deferred. You only pay taxes on the dividends that you receive. And number six, best of all, you'll have time to focus on more important things in your life, like your family, personal improvement, and enjoying life altogether.